Hey everyone, this is Scott Cody, partner with Latitude Financial Group. Today, what I wanted to cover was um, and discuss this 2023 Medscape report for physicians on taxes. And I found a handful of kind of interesting um, points that I wanted to highlight on this. So, first question, this was a little over 10,000 physicians surveyed for this, and a little over uh, $83,000 was paid in federal taxes, was reported by the physicians surveyed. So the average federal tax bill uh, for physicians were a little over $83,000. Those who file jointly, married file jointly, pay just about 92,000. On average, state taxes for all physicians on average was about 13,000, just a shade under. And on average, for married filing jointly physicians, uh, about 14,000. I think, like many Americans, this was really no surprise to me. Um, most physicians, 75%, feel like they pay too much in taxes. Again, I don't think that's really all that enlightening or stood out to me. And looking at your average or average marginal tax rate for physicians, uh, for all physicians surveyed, it was 35%. And those, again, married filing jointly said 35%. And so I just want to take a moment on that note and bring up, your tax rates here. And so in the United States, I think most people know on a federal basis, we're in a graduated tax system, meaning if you hit certain threshold incomes, you know, you're going to pay X amount. So, as an example, uh, if you're married filing jointly and you earn the first $23,000 to $94,000, you're paying 12%, and then from 94,300 to 201,050, you're going to 22. Well, the reason I bring this up is most physicians say their marginal tax rate, so it's the last dollar taxed, was taxed at 35%. So married filing jointly, that means, your average income for that population is somewhere between 487,000 and 731,000 to fall into that federal tax rate of 35%. Those who are filing single as single tax filers, that means you're earning somewhere between 200 and call it 44,000 and 609,000. And I think that's noteworthy and something that I'm going to bring up again here in a couple of pages. Moving on to this report, um, you know, roughly half of all physicians say they don't pay an alternative minimum tax, and 34% said they were unsure. Uh, and then this is one of the pages or data points that I thought was interesting. I'm rounding here, but I'm calling it half of all physicians say they do it themselves, do file their taxes themselves. And I thought that was interesting and worth noting is if the average physician is, in that 35% tax bracket, and probably making somewhere on the lower end, I guess $250,000 as a single tax filer, and on the higher end, 700, obviously, 700,000. We could fall outside of that. Um, because that's an average. So I'm sure out of the 10,000 physicians surveyed, it was more than there was some percentage of the population that fell outside of that. Um, you know, thinking of filing your own taxes, I guess some of my thinking is, why? Why go through the headache? And, looking further ahead in this report, if you're ever audited and wanted, a CPA's help or professional guidance at that audit, I think it's worthwhile having that professional there to help you get through that process. So, uh, the only thing I can think of from wanting to do your own taxes is that, it's a pretty simple return. Maybe you're a W-2, an employee at a hospital setting, and, you don't have many deductions. Um, but I'd probably encourage folks to, in most cases, hire a professional to do that. The brain drain, the time, the energy, and then if, in cases of an audit situation. Most people, the question was asked, do you agree with the US tax system? And most people in the survey, 2/3, said, they felt it was fair and it made sense. And so, um, you know, not, I don't think, a big surprise. Have you ever been audited? And this is what I was referring to on doing your own taxes versus, having a professional do those. I think it's worth the time, energy expended, money paid out for that service to be done. But, teach their own. Have you ever been audited? About 20%, said they've been audited. And that can be a pretty stressful situation, I'm sure. And, again, I would just encourage those folks that fall into that other half. But again, if you got a relatively simple return, maybe some of this population is going to be probably fellows as well as residents. Maybe their situation is, pretty straightforward. They're in a teaching setting, they're a W-2 employee, maybe they're doing some moonlighting. That would be pretty straightforward. And if you're just filing for yourself, it might not be necessary in those cases. Moving on to in this report is, uh, how physicians felt on having, so of those, roughly half the population surveyed said yes, they use a tax professional. Little over half of that segment said it was extremely important for to have someone prepare their taxes, and so I don't think that's a surprise. I think, most people who have an accountant, CPA, tax preparer, find that role or that professional advisor important in their in that aspect of their life. I wanted to really get on to, what I thought was one of the highlights is this page 18 of the report. And the highest or most used tax breaks that physicians use or utilized. And so looking at this first one, 70% contribute to charity. That could be contribution to, let's say, the American Red Cross, or to your church, synagogue, temple. That could be, donating, maybe used items from your house to Goodwill. So don't think, that comes as a complete surprise. And, from a tax strategy standpoint, that's, charitable giving is a pretty common use. This next one I found, thought it was on maybe a little bit of lower side, that 60% of those surveyed, so we had a little over 10,000 folks surveyed for this report, and that, utilize some kind of pre-tax retirement plan. 401k, could be a 403b if you're in a university, hospital, teaching setting, a non-for-profit. Those are just non-for-profit 401ks, but they're essentially the same tool. So I thought that number was a little bit low, given that we had the average tax bracket or tax rate at 35%, and we already discussed that what that means from a salary or income standpoint for those, and they would be considered, highly compensated employees. I thought 60% was on the lower side, but I do realize that, you might have some fellows in here and residents that, their incomes have not, gone up to that level yet while they're still in training. But that was a bit of a surprise. 52% take advantage of a home interest deduction. I thought that number might be higher, but you could have, again, fellows or residents that don't own a home. Maybe they're renting at that point in their life and will, purchase a home in the future. And then you also have probably some of the segment of the population surveyed that have paid their home off. 27% of this group utilizing a college savings plan. Now, you don't get a big federal deduction. In fact, in most cases, you don't get a federal deduction at all for utilizing 529, but you do get, in a lot of cases, a state income tax deduction if you're contributing to your state's plan. So, and I realize you're going to have some folks that don't have children, that could be single, don't have children yet because of their age, or their children are now grown through college. So, and these next two, selling investments at a loss. I think this is a pretty important tax strategy or tool that folks can take advantage of. And, again, looking at the average tax rate for most physicians being 35%, you can do something called tax loss harvesting. Typically we do that. It could be done throughout the year for sure, and done that. But that would be selling some of your losers in a taxable investment account for the year to offset some of your winners. So that's a tax strategy that can be utilized. So I thought maybe, 22%, a little bit on the lower side. I would have expected that number to be slightly higher, as well as this next one, contributing to a backdoor Roth. So again, referring to the tax rates here, that since most physicians fall into this 35% tax rate, as a single person, your cutoff for a Roth would be in the 24% rate tax bracket. And as a married couple filing jointly, your tax cutoff would be somewhere in the 24% rate. So again, if we're looking at the 35, we've got the 32, 35% tax rates, that more physicians could be utilizing this strategy. And for various reasons, maybe they're not. Just looking at the number here, about 20%. I'd say a lot of them are ideal candidates to use this strategy, and it's those who do not qualify for a traditional Roth contribution, Roth IRA contribution. This strategy is essentially a loophole that exists for high income earners to fund money into a Roth. And why one would want to do that is really not tax savings today, although your money, once you contribute, grows tax deferred, but it's accessing it in your retirement tax free, and that's why you'd want to utilize a strategy such as this. So I thought 20% was on the lower end given the incomes of this population. And owning rental properties, again, depending on one's cash flow, can be a great strategy for getting passive income, particularly, when you reach those retirement years. Okay. Moving on in this report, um, what do physicians think Congress will do with tax rates? Yeah, I think, most of them are right on par when they say, a little over half have said, they expect tax rates to increase. And I would generally agree. We look at the current tax law, and that is going to sunset in 2025. And so it makes sense to me that these rates are probably going up. Also, when you look at our federal deficit, um, likewise, uh, taxes bring in, revenue to the government. And so one way of paying down our federal deficit, and probably the primary way, would be through tax revenue. So I tend to agree, which again makes, the argument for funding Roth accounts, I think it makes it a stronger argument. If we believe rates are going up in the future, wouldn't we want to be deferring money now into Roth accounts while tax rates are while we're at lower tax rates? So I think that's a pretty logical argument. Moving on. Um, what specialties, physician specialties participated in this, or even looking at gender first. So, excuse me, roughly 60% of those surveyed, so again, a little over 10,000, were male physicians, and about 40% were female physicians. Age, I would say it's pretty equally distributed. So across most working ages for physicians, and then by specialty and subspecialty, the dominant fields or specialties were internal medicine, family physicians. Others included pediatrics, uh, emergency physicians were a higher group, and OBGYN were some of the highest participants in this group. Well, thank you. That's what I wanted to review, was this report. It was just released in April for the previous year. So, through data collection and release, we're typically a year behind. But just wanted to review that, share with you some of my thoughts on this report, and thank you for taking the time. Bye now.